everyone. I'm Noelle with Verivest, and today with me I have Ralph Abbott and Richard Adiansingh from Prospera Advisory Group. Nice to meet you guys. How's it going?
Great. How you doing?
Great.
It's going well. Very nice to meet you.
Great. Yes, it's nice to meet you guys too. Tell me a little bit about your guys' background story, how you got to where you are, your origin story, I guess, of your company.
Well, I think I go way back since I was a little kid. I used to actually lend money to my sisters. So I've been a private lender, I think, my whole entire life. My family used to always say I was going to be a banker because I just used to cut grass, get my money, and then lend it to my sisters. And then I charged them 10% every week. So every time they got their allowance, they had to pay me. And then I relent it to them. So mine goes way, way, way back. So I ended up actually going into banking. I started out in commercial underwriting. I say like my first half of my career was in that traditional banking world. So I was a commercial underwriter, a commercial lender, and then halfway through, I kind of switched to the non-bank lending world, which my last real job in the world was with Lehman Brothers in 2008. And actually, that is how I met Richard in 2008. Was it 2008 we met or 2010?
2000, I think it was 2008 or 2010, sometime around there. Yeah.
It's been a long time, but
it's a long time.
Long time. So my whole background has always been in commercial lending with commercial real estate. And so sitting in the banks and doing non-bank lenders, you always saw opportunities that didn't fit the bank's box, but they were still good deals. And then that kind of really exposed itself in 2008 when we saw a market, or a pullback in the market from the banks, and especially in that 2 million and below market. So that's how I kind of started out first is, I was doing one-off deals until just one-off deals with investors and then getting those refinanced actually back through Lehman Brothers product. And so I ran into Richard, which is actually was introduced by my wife, but I'll give you that. I'll let him tell you that story. And when we met each other, that's how we kind of decided to form Prospera. We just saw opportunities, and just like right now, same kind of opportunities.
Okay.
Yeah.
All right. So I started off originally in social work. And then after that, I transitioned to sales, and then I got into residential real estate. I did fix and flip with single family homes and small multifamilies. And then when the market crashed, I kind of transitioned into helping investors purchase loan portfolios, real estate portfolios from the banks. Then I transitioned to working for a real estate private equity investor in town. And to Ralph's point, that's exactly how we met. Ralph's wife works for a bank, and she was in charge of workouts. And so every week I would go in to look at the loans they had that they might want to sell. Ironically, we never struck a deal. I think probably because the offers I made she felt were too low. But out of that relationship, I met Ralph. So, I think it was a win for Ralph.
That's funny. Awesome. I love that story. How do you guys source your deal flow, and what is your acquisition strategy?
So we source our deal flow from three sources. Majority of them we get from banks. And the reason why the banks work with us is because we're transactional. We're not a threat to them. So they might have a deal on their desk that they can't do. But they also they want the deposits and some other things that they want to sell to them. So we can come in, and I always say that we can be their no. So we can come in, take the real estate deal, close that, and hopefully whatever the issue that they couldn't get approved for with the bank, they clean that up, and then we send it right back to the bank. So they like to work with us because, we don't take their clients. We're trying to give it back and clean it up for a future deal for them. And then the second avenue is through our broker and realtor networks. So the Midwest is really our territory. We have, between the banks, the realtors, and the mortgage brokers, we have a network of people that we're constantly getting and looking at deals.
Awesome. What you kind of mentioned, what key markets you operate in? Are you just Midwest?
Yep.
And like what states?
So we focus just in the Midwest, Ohio, Michigan, Indiana, Illinois, Pennsylvania. And then within those states, we look at the major cities within those states. So we won't do any properties that are located in the rural areas. So for Ohio, we look at Cleveland, Columbus, and Cincinnati. We won't do anything rural in Ohio. So in Pennsylvania, we look at Philly, Pittsburgh, Indiana, Indianapolis, Fort Wayne. So we stick to the major cities within those areas. And then we dig deeper into those and what areas in those cities do we want to look at. I can get really deep down, but as Richard always says to me, that I get too bankerish on it. So I'll just leave it at that. And that's how we start to look for deals and what deals we want to do.
Great. Awesome. That's funny. What is your guys' investment philosophy, and how do you determine whether a deal is worth doing or not?
So our philosophy is we start out is, do we have an exit strategy for this loan? Because we're not a long-term lender. We really want to be in and out no later than 24 months. So when we're looking at a deal, we want to make sure that, one, can the borrower pay at least the interest payments, because we really don't want to take back properties. We really just want to, make our return and get them back to the bank. Do we have an exit strategy? We look at the collateral type. So the type of properties we like, we say, we like it to be a box, which means something multi-purpose. So if we do have to take it back, we could either easily sell it or put a tenant in there and hold it. And even on the residential side. So we don't really like, I'd say, single purpose properties, something like a gas station or a hotel. Mm-hmm. That's always going to be a gas station. That's always going to be a hotel. There's nothing much you can do for that. And so that is our kind of underwriting that we start out with and start out to say, okay, is this a deal that we really want to do?
Awesome. Okay. What do you guys do to generate value once you've made your investment? And then what do you do to ensure capital in return on that investment?
Well, that's mine. Okay. Yeah, that's mine. I mean, the last question was mine also, but Ralph took it. But I'm not going to make a big deal about it because this is being recorded. So let me start by saying that, we are great stewards of our investors' capital. And with that being said, one of the things that we do is we kind of reverse engineer and ask ourselves if we would want to own the property. We look at every single property that we invest in. So if it's in Indiana, Ralph or I are getting in the car and we're walking and we're looking at that property, we're looking at the area surrounding the property, because photos tell you a lot, but they don't tell you everything. And so to go and kick the tire, so to speak, is the first thing that we look at. So if we want to own it, then we go look at it. And then from that point, we're a full doc lender. So, do you have the cash flows? We look at the tax returns. We want to make sure that in the end, you can exit our loan. And we also stay in contact with our borrowers. So throughout the entire process, we're making sure that they're on track. So if it's a rehab, we're checking in on the rehab. I mean, besides the reports we get from the rehab company, we go out and check progress for ourselves. And then usually about 90 days out, we're reaching out and saying, hey, we know they're on track, but what's the plan? And if the plan was to refinance, and let's just say something came up where he didn't work on credit issues. So at that point, we discuss, okay, well, it doesn't seem like you'll be able to refinance. Let's discuss you selling the property. Or it's quite possibly they might need a loan extension because they didn't fix credit issues. But again, we're very hands-on. We stay in contact with our borrowers. And that's one of the main reasons that we lend only in the Midwest, because our philosophy is we want to be able to go see the property and get back home in a day.
Awesome. Love that. Okay. Who are the key players involved that allow you to execute your acquisition strategy within your company?
Well, I would say one. So there are two key players, actually three, but I think one of the biggest that we work with is Verivest. Verivest helps us raise capital. They take care of all of our reporting because Ralph and I like to say we do two things, and that's basically raise capital and make loans. And then another partner we have is FCI. FCI is our loan servicer. They have $10 billion in servicing. And again, this goes back to being stewards of our investor capital. So all of the payments are an ACH payment. FCI pulls on the first. If it's not there, they pull again on the third. By the fourth or fifth of the month, they have called, and we're also calling. And again, it goes back to that we do not want to lose our investor capital. And then we also work with Boxwood Means to get reports on what the commercial real estate market is doing in the Midwest. And also they do desktop appraisals for us.
Awesome. Okay. Well, it was so nice chatting with you guys this morning and learning more about your company. It was nice to meet you.
Yes, you too. Thank you.